Hello and welcome to Business Incorporated. Well, it's the second trading week of February right here in Lagos, Nigeria. Here's what's coming up on the show. United Nations Trade and Development launches the 2024 Economic Development in Africa report today. And it's inflation reporting season, and Egypt's statistics agency reports annual urban consumer price inflation rate that inched down to 24% year-on-year from 24.1% in December. And gold nears record highs as Trump's tariff, those threats are boosting safe haven demand. It's great to have you join us. I'm Ladi Williams. Let's get a check on the markets now. Let's see what's playing out. With the oil market, we're seeing oil edging higher today, clawing back from last week's losses. That's fueled by global trade war fears. And we see a big jump there for Brent, 1.15%, $75.50 a barrel. That's for Brent, and WTI, that's the US grade, $71.81 per barrel, up 1.14%. Brent moving with a bigger move this morning. And it's all about Trump today. Investors are watching out for what the next tariff threat is going to be. This time, they're targeting steel and aluminium imports there. So we're seeing investors react. What's going to come today? And we're seeing other markets also on edge, at this point, wondering what the next move is going to be from the U.S. president. Let's get a check on what's playing out with metals now. We're seeing metals, that's for gold, holding steady today, still hovering, close to the record peak it hit in the previous session as investors are flocking to the safe haven metal there. So I would see that's palladium, that's down about 0.04%. Gold, 1.41% per ounce. That's for spot gold trading. U.S. gold futures, $2,894, 0.2%. But silver, that's dull today, just unchanged, $32.73 per ounce. So still eyes on what's going to play out with the latest tariff threats. So other stories now. The United Nations Conference on Trade and Development has unveiled its 2024 Economic Development in Africa report, offering a roadmap for the continent to turn economic vulnerabilities into growth opportunities through enhanced trade, investment, and regional integration. The report reveals that nearly half of African countries depend on oil, gas, or minerals for at least 60% of their export earnings, leaving them highly exposed to global commodity price fluctuations. Well, to unlock Africa's economic potential, the report emphasizes the critical role of the African Continental Free Trade Area, which could create $3.4 trillion a $3.4 trillion market. However, achieving this requires substantial investment in infrastructure, expanding transport, energy, and ICT networks, alongside streamlined trade policies and processes such as customs reforms. So that report, we're still going to be spotlighting that later on today. Well, the reports that the Central Bank of Nigeria has postponed its first Monetary Policy Committee meeting in 2025, which was slated for February 17th to March, following delays in the release of the rebased Consumer Price Index report by the NBS. Well, the CEO, Center for Promotion of Private Enterprise, Mr. Dr. Muda Yusuf, who was a guest on Business Morning, says this is already creating uncertainty among investors. Take a listen.
A number of investors take a cue from whatever the policy position is, especially in the financial markets. Of course, people look at what the MPR will be, what the interest rate direction will be, and that will determine decisions, as to whether you want to invest in bond, whether you want to invest in stock market, how you move your resources. And because these decisions are already programmed by fund managers, by all those in the investment space, this is creating some uncertainty, and that, of course, is delaying investment decisions in critical areas, particularly, again, in the financial markets. And again, many of the investors in the real sector are also hoping that by now, at least, we'll have had some indications of easing of the monetary tightening space. because a lot of investors are groaning under the weight of these high interest rates. And because of the way things are going, we are beginning to see some gradual recovery, some gradual stability. So we are expecting that by the time we have an announcement from the CBN, that will give a signal to the direction in which this interest rate thing will go.
All right, I guess everyone's watching out for the rebased numbers now from the NBS. Definitely that's going to inform the next move by monetary policy and investors, definitely. So we're all waiting for that data. Well, to our first conversation now, in a bold move to address the infrastructure gaps and unlock the potential of Nigeria's creative industries, the federal government approved the establishment of the Creative and Tourism Infrastructure Corporation, CTIC. Well, let's talk more about this now with Mr. Kayode Adebayo, the founder, Crowd, and board director of Arts Connect Africa. Great to have you on the show.
Yeah, thank you for having me.
So, talk to me now. How will the CTIC, identify and prioritize infrastructure projects to ensure, maximum impact on the creative and tourism industries? We've seen other countries, reap the benefits, of their tourism sector. So, tell me how this is going to help.
Well, I think the idea is the federal government in this direction to be able to bring in private and public involvement in this is quite interesting, because typically government is supposed to just play an enabling role in something like this. So the fact that they are bringing in private sector into this with an intention that private sector is supposed to do more of the driving of it, while the government allows an enabling environment for their investment and for them to be able to achieve return on that investment is quite good. The good thing about that is that the moment investors are able to see that government is involved, government is putting.
There's one guy that's at front desk, so that I won't keep him waiting for too long.
The fact that the government will see, people are seeing that government.
All right, we'll try and solve that interruption there in the Zoom meeting. But, definitely it's all about how Nigeria can also, reap the benefits when it comes to tourism in the country, and how we can learn from other African countries that are taking advantage of their tourism sector. All right, sorry for the interruption there, Kayode, but you can finish your thoughts now.
Yes. As I said earlier, the government coming into this in a more of like a PPP approach is quite comforting, because it means that private investors are not just coming in and walking that whole line by themselves and taking all the risk. The government will be able to buffer the risk quite a bit. And to a very large extent, it gives investors a lot of comfort, knowing that they are not in this alone. The government is involved with them. And I think we will be seeing quite a lot, because if private investors are coming in, you can be sure that to a large extent they are going to make sure that everybody crosses, they dot the I's and they cross the T's, especially when it comes to them putting in funding and then looking at the return on investments that will come from there. Government stands to benefit, and the people of Nigeria stands to benefit from it also, if it is properly done. There's no gainsaying, we need a lot of infrastructure right now in the Nigerian market in order to be able to give value to the culture products that we have. And if we don't have it, it means that to a large extent, a lot of our value chain, a lot of the value on that whole process will not be captured into Nigeria properly. And infrastructure is one of those things that can make it happen. If you have the right venues to be able to deliver your events, if you have the right internet structure to be able to deliver the deliver the whole process, if you have the right payment solution system, the technology and all that, it only it will only go up and up. And I think that is what we need right now in Nigeria as an economy, to be able to help us drive up our GDP, especially from that particular area of the sector.
Right, it'd be great to actually see Nigeria taking advantage of the tourism sector. But what specific mechanisms do you think should be put in place to attract and secure investments from both local and international partners?
Sorry, I didn't get that.
So what kind of mechanisms do you think should be put in place, so that we can attract and secure investments from local and international partners, not like we're just looking at only international or local, but from both parties?
Yes, I believe that to a large extent, with government being involved, it helps development institutions, even on a local and global level, to want to play and be part of that, because government is able to help give that comfort in the area of securing those investments to make sure that it has good return on their investment. For example, the African Development Bank has been doing quite a lot and earmarking some kind of financial capacity for this, but there is no policy in place really that can allow that particular value to be able to trickle down and be used properly in order to be able to give the value that the economy needs right now. We are looking at a very young people population that by 2035, we will have a population of almost 1 billion people on the African continent, where Nigeria is the highest, that has the highest population, that will need to be gainfully employed, that will need to participate in economic activities. So I think the institutions, the development banks and a lot of the global financial institutions, they are looking at wanting to participate in this because the opportunities there, opportunities in upskilling people, opportunities in getting technology to be made available. And if this is the comfort that they need to be able to want to go ahead, I think it's a welcome, what do we call it? It's a welcome situation.
Right. Most of the time, we put focus more on urban areas, but how will the CTIC ensure inclusivity and accessibility for, small-scale creatives and entrepreneurs in mostly rural and underserved areas?
Well, I think it will be a gradual process. I think at the very beginning of this, it will always be the people that have been prepared for this opportunity that we have that first movers advantage on it. But the good thing about it is that after a while, you start to see it trickle down, with the intention that it has to get to the fringes, basically. Because when you look at Nigeria as an economy, we have like 4 or 5 main countries and main towns and cities. Those people, practitioners that have been in this for quite a while, there's no how you move that sector forward without involving small and medium enterprises. From the creative sector, it has always been shown that 60-70% of all economic activity is driven by small and medium enterprises. So the people that have prepared for this for a long time will first be the first, they will benefit first from this. And then after a while, you start to see being able to spread across different areas, because right now I think we have the data to a large extent to be able to guide every investor in that space. We have data coming from the telcos, we have data coming from even the payment solution companies. All these things are data that I believe can be harnessed by the government to be able to plan how that whole process will be able to go. And I think it should be, they should run it in a phase-by-phase approach, because the idea of wanting to pursue it once might be a bit counterproductive. But if you take it at the first phase level, second phase level, and then the third phase level, I think it has the potential to be able to deliver that value, as you have mentioned.
Right, and mostly we're getting reports of the dirty December in 2024. How do you see this impacting, the ones to come? Do you think Nigeria will reap more benefits, from the upcoming dirty Decembers?
Well, it's been interesting because December has always been dirty in Nigeria for quite a while. It's just that this particular one somehow captured the attention of the government, because at least some governments were deliberate in putting together a plan in order to be able to see what it is, what it looks like, and to be able to have the necessary metrics to guide them in how they want to intervene going forward, basically. The numbers are good. From what I see, I think the hotels, a lot of businesses in that whole value chain were quite affected positively with this whole thing, especially the businesses from, for example, the real estate market was quite affected by this positively. Now that there's data, now that the government has seen potential, I think there will be more preparedness, not even only from Lagos state government alone, but by other states generally that are within that region, especially the southwest region, to be able to put in place the necessary planning and the necessary policies and even necessary investment that will allow those numbers to continue to grow going forward, even from 2025. I'm sure a lot of governments right now are starting, they have put committees in place to start to plan for December 2025 already. And I think those are the benefits of having the right things in place, because we have the people, we have the numbers, we have the culture that is very attractive to the world. It's only if we're able to properly propagate it and display it and publicize it, it will continue to bring more people in. And I think beyond even just the whole thing about coming to party for a whole month in Nigeria, it will start to trickle down into things like these people coming in wanting to invest in real estate, wanting to do some form of backward integration to be able to plug their global business into the local market here, and then be able to see how they can tap into the human resource market here to be able to kind of support their global business. Because Africa is where the business is in the next 5 to 10 years because of the youth population that we will start to have. Africa will become the youngest continent by 2025, where 1 billion people will be 25 years and less. And you can imagine what that will be as a labor force on the global level.
Right, and definitely we have entrepreneurs that would like to, key into all of this. But how can they build, skills and capacity, that can help Nigeria's creative workforce, even, get better and key into this CTIC?
Okay, I think there are already initiatives, especially the kind of initiative I belong to, the Arts Connects Africa. And then our company also, crowd.com, people are positioned already with that whole idea of wanting to skill Africans, getting them not only to operate as local labor or local talents alone, but making them into global talents. For example, how Africa is very affordable, especially when you look at how the cost of labor here on the African continent, skilled labor here on the African continent, and compared to the cost of saying maybe in more developed economies. So platforms like the network like Art Connects Africa, ACA, is already working around training. They've been training professionals, the next African professionals in these areas. And Crowd also have developed a technology that also not just only trains, but help match local talents to international employers, basically. And they will be doing that with some level of affordability, so they have a lot more to be able to invest back into their business is going forward. And of course, if the biggest customers and the biggest demands will be coming from Africa by 2030, 2035, it only just makes sense that businesses start to look at how to be more culturally intelligent about Africa, how to be more market intelligent about Africa, and also being business intelligent about Africa. So it's good times coming for Africa.
All right, let's get Africa ready for business in 2025. Thank you so much. It was great having your perspective. Kayode Adebayo is the founder, Crowd, and board director of Arts Connect Africa. Thank you so much.
Thank you so much. Thanks for having me. Bye.
I'll take a break now. When we come back, we head straight to the markets, find out what's playing out for the local bourse and most of the global markets that we track. Do stay with us. Welcome back. Well, we have breaking news now. The new dates, that's for the Monetary Policy Committee meeting now. That's what was scheduled for February 17th, but now it's been moved to February 18th and February 19th. That's Wednesday and Thursday, 2025. So all investors and most of the market participants now have a new date. That's for the MPC meeting. That's the first one for Nigeria in 2025. That's for Wednesday, and we'll get decision day Thursday, 19th of February. All right, let's head straight to the markets. Now we have Ini John McCraw with the details. Ini, I guess now we can all calm down.
Yes.
We have a date for the first rate decision meeting.
Yes.
That's for February. So
yes, I think that the markets should be happy by now, because this morning when we had this conversation, I had this conversation with Dr. Muda Yusuf, and he expressed the kind of uncertainty, that goes around on the mind of investors. So because obviously they need data and information to make decisions.
Right.
And so if the NBS had promised that the rebased numbers will be released by the 31st of January, and then we're on the 10th day of the new month of February, and we haven't seen that. So obviously we can expect that, the CBN would have to hold on.
You can't hold on forever.
We can't hold on forever. But I don't know, Ladi, but perhaps there's, this morning I just said there's communication. I think there's communication going on between the leadership of the NBS and the CBN or
so
the
maybe
MPC.
MBS has hinted that
don't worry, the numbers will come.
Right.
So you can actually hold your meeting. So I'm hoping that's the case, so that there's confidence and certainty in the market.
Right.
Because if not, the market and investors will just be waiting.
So
to see
I guess
which
we hold
direction.
on now. We might get those numbers at some point.
Yeah,
before
so
the meeting.
check your space,
I'm going to be checking.
Good afternoon, everyone. Welcome to the market segment of Business Incorporated. Looking at the market at intraday, there we see a slight gain for the NGX at 0.01%, sustaining the 105,000 level. Still 900. I was hoping by now we'd have 106,000, but we'll see what will happen at the close of trade. Majorly driving this are earnings. I know that this morning we did see Okomu results from Okomu for the full year 2024. So we see that revenue was up 73.44%. The gross profit also went up more than 70%. Pre-tax profit was up 58%, and profit after tax also was up 61%. Earnings per share also went up. So if you were an investor in Okomu Oil in 2024, you would have had about 61%, almost 62% increase in your earning per share. I learned this is what does earnings, not just Okomu. Obviously, we've seen the ones before now, are driving market sentiment. But let's get the details now and some other issues with analysts joining us. Abiodun Adedotun, equity trader, FBN Quest Merchant Bank. Hi, Abiodun. Good afternoon.
Good afternoon. It's good to be here.
Yeah, good to have you on the program. So I wonder if I should start with the new news that we have, that the MPC will now be on the 18th and 19th, which is just the day after the original. The original schedule was supposed to be 16, 17. Mm-hmm. So now we have 18, 19. So I guess this will give investors some calm and direction in their decision making.
Of course, the MPC's decision and the outcome of the coming meeting is going to give direction to where interest rates is going to be, and of course, it's going to also be the driver to investors in taking positions in select names on the equity side of the market, as well as any other form of alternative investment that you might have out there.
Yeah, okay. And how much impacts are the results we are seeing? I just read out Okomu there. We've had some, very impressive results, profits of over 100% and all of that. How much impact is it having on investors' decisions in the market at this time?
It's pretty much at more of a good impact, positive impact, at least since the start of the year. Investors have been taking position in anticipation of these earnings. Mind you, we still had the Q3 numbers, which was released sometimes in October. So what we just need is just the aggregation of the Q4 to be able to get the full year. So the trend has already been set earlier in the year for 2024, and by and large, the companies have not really disappointed. investors are still very, very excited. They are happy about the performance of some of these companies.
You know, there's been, last week we saw the banking counter shine, but there's been a lot of conversations around consumer goods. We saw Okomu, Presco, the stocks around those ones. What are you hearing, and what are investor sentiments around these stocks in consumer goods?
Okay, for the consumer goods, maybe we'll try to separate the agricultural companies from others. Okomu, Presco, they've done very, very well, of course, because of the nature of the goods they have dealt with, and which is an export, commodity, basically. And we know how these commodities have done. They've done very, very well over the past 12 months. For others in the consumer sector, say, your Nestle, your Nigerian breweries, there's still a bit of course, investors are still paying careful attention to that space, especially given the fact that some of these companies, Nestle, Nigerian breweries, they have exposure to FX, liabilities, and we all know the story about how FX has been in the past 1 year. Some of them are even currently still posting negative equity, but it's looking like there might be a turnaround for them. So investors are sitting on the sideline watching keenly on how these companies will be able to turn things around.
So how do you see the market closing today?
The market is about flat. I think the market will just close at about this level. Everybody is waiting for the numbers, and coupled with the fact that from last week's performance, you have to reappraise your positions and see how things will proceed as long as the week progresses. Yeah. So I think the market is flat.
All right, well, at least we have 18 and 19 to count down to now, like when we didn't have those days. But thank you so much, Abiodun Adedotu, for sharing the market perspective with us this afternoon.
You're welcome.
Now let's look at other markets. South Africa is also positive intraday, 0.09%, 87,552.38. Egypt is positive. Kenya is still struggling. We see it at 129.58, lost 0.33% on Friday. Look at other parts of the world. The Middle East at this time is also mixed, but mostly positive. Dubai is positive 0.44% at 5,261.38. Abu Dhabi positive, but not so good for Saudi Arabia. Tadawul of Saudi Arabia is in the negative 0.06% at 12,461.08. Qatar is positive 0.18%. Moving away from that to the United States, yes, President Trump is still, doing his thing. Stock futures rose early today. Investors are braced for a data-packed week ahead, and reports that President Trump may announce another round of tariffs today. That also is on investors' mind. Look at the numbers. Dow Jones is green. S&P is green, NASDAQ is green. Glad to see them recovering from the DeepSeek shock. I hope it's sustainable. If there's no other shock coming their way right there. So President Trump has said that he's planning a blanket 25% on all steel and aluminum from today. So of course and the data that's being expected this week will be driving the market. In Asia, we see Nikkei is positive this afternoon. That's their close of trade, 0.04%. Kospi of South Korea is negative. Shanghai, Hang Seng is positive, really positive, 1.84%. And then Shanghai positive also. While for India seems to still be struggling in spite of, I think they had their budget announcement last week, but they're still struggling. But at least you would notice that they have gone past that threshold of 22,000, now at 23,381.76 for India. So it's a mixed market. I still looking the way of the United States to see what next President Trump will do. Will this 25% tariff come at this time. We're still counting down to the one of Mexico and Canada, which he said he will hold until the end of the month. So we'll see how all of this meets and how investors will react to it, Ladi.
So much to look out for this trading week. I guess we can expect volatility.
Yes, it does look it's going to be a very volatile week, but not for us, Nigeria. I think we're safe for now, but we're counting down to 18-19, and the market might be sluggish until then, because it seems everybody will be looking the way
maybe priced in, already.
Yeah,
that's for the meeting.
Yeah.
Well, we'll keep tracking to see how it all plays out. Thank you so much, Ini, for giving us the details there, what's playing out for the local bourse and most of the international markets that we track. Well, let's take it on to the UK now. We have Juliana standing by. Great to have you, Juliana. So we're seeing Recruitment and Employment Confederation and a KPMG survey that's showing the biggest drop in vacancies since August 2020 in the UK. What are you hearing about this data?
Ladi, good afternoon. Yeah, this is another really disappointing set of data that's been compiled by BTP, as well as KPMG, just having a forensic look at the labour market. And I say it's disappointing because over the past couple of weeks, the Chancellor of the Exchequer, Rachel Reeves, has faced a barrage of criticism over her October budget, that fiscal statement that announced £25 billion worth of tax rises basically for businesses in this country, which is coming up in April. It's going to cost them 5% more to hire people in the UK. And according to this data, this has had a significant knock-on effect on the labour market, which, to be fair, since the emergence out of the pandemic has kind of been a bright spot of the UK economy. I think unemployment has been universally and historically low, hovering between 3.3 and 4.4%, where it is today. But again, according to this new data, just having a look at the labour market in January, it does show that private sector employment has slid to its lowest level since November 2012. That's over a decade ago. And business confidence separately has also fallen to a 2-year low. Again, you mentioned vacancies. They're also at their weakest level in nearly 5 years. And all of the data is pointing to the reaction, pretty strong reaction, from the business community about these hikes that Rachel Reeves has put up in her fiscal statement. Something else that I suppose, of course, got to be good for employers in the UK is that the national minimum wage is also soon going to rise by 6.7% in this country. But a lot of businesses have complained that, they're still trying to grapple with changing consumer habits from the pandemic. Lots of the rate system in terms of tax and having a bricks and mortar establishment are still struggles and burdens for businesses when they're trying to compete with the big tech giants that don't have those costs and are able to work remotely in the UK for half the price. So this is, like I said, again, going to be a significant headache for not just the Chancellor, but also the Prime Minister, who stuck his neck out of the line for Rachel Reeves in the past couple of weeks. But the data, all of the data indicates that the fiscal statement she released in the autumn is having a negative impact on the trajectory of the economy.
Right, and it's a brand new week here in most markets. What market moving data are we expecting in the UK?
Well, I suppose the big one has got to be Thursday, which is the release of GDP data, month-for-month data for December, as well as the final quarter of 2024. Now, we know that the UK economy is limping its way, I don't want to say out of a recession or into growth, but we're certainly not where we thought we would be. Just last week, when the Bank of England met at Threadneedle, they actually downgraded growth and revised the growth forecast for the UK from 0.75% to 0.75%, shall I say, from 1.5 So that GDP data is going to be very important. October, we contracted 0.1%, and then there was growth of 0.1% in November. I believe economists are pricing in flat growth. But yes, we shall have to wait and see. But if we actually look at the London markets and intraday, we're doing better than our European competitors. The all-share is up 0.41%. FTSE 100 is up by 0.47%, and the FTSE 250, the domestic market, that's up by 0.53%. I think oil titan BP, their shares jumped due to an activist investor issue, which has lifted up the market today, Laddie.
Markets in tip-top shape right there in the UK. Thank you so much, Juliana.
Thanks, Laddie.
All right, let's take it on to Europe now. Talking about Europe, see the Baltic states, Lithuania, Latvia, and Estonia. They've been disconnected from the Russian power grid. That was earlier in the weekend. They've joined the European power grid in a bid for more energy security and independence. Well, join us for more now. We have DW correspondent Chipon Chimbelu. Great to have you, Chip. So, how significant is this move?
Well, this move is largely symbolic, but it has geopolitical significance. Lithuania, Latvia, and Estonia have not bought Russian and Belarusian electricity since May 2022, but they were integrated into Russia's power network system because the three EU states were part of the Soviet Union for more than 5 decades, and they became independent in 1991. And while the Baltic states have been part of the EU and NATO since 2004 and also used the euro, they remained part of the Russian power grid, and that gave Russia some ability to control their power supplies. Now, disconnecting from the former Soviet Union, so that is Russia's integrated power network, and being part of the continental Europe's synchronized grid was a strategic goal, and it was one that was even more apparent after Russia's full-scale invasion of Ukraine in 2022. Now, the Latvian energy minister told DW that this is about defense, energy security, independence, and the economy. The three Baltic countries are distancing themselves from Russia and their Soviet past by joining the EU electricity grid.
Quite interesting, but what does this switch, what does it mean for Europe?
Well, Laddie, for Latvia, Lithuania, and Estonia, this switch is about diversifying energy suppliers and their energy mix. And it also means they can integrate more renewables like solar and wind energy. And that's because being part of the EU's power grid allows the three countries to be part of its common electricity market. And that means that the three Baltic states can export any surplus renewable energy to the other parts of the EU. Brussels has set a target for all its members to be able to import or export at least 15% of power produced within the bloc, and it has supported the Baltic states with becoming part of its integrated electricity system. Now, it invested 1.23 billion euros to help them connect, and the Baltic states are now linked to the EU's power grid through Poland, Sweden, and Finland. But while all these links may ensure a bigger energy mix and steady flow of electricity, there are also some risks. Authorities have already warned about potential security risks, including operations against critical infrastructure. And that is why NATO and its member states have been beefing up security in the Baltic Sea, Laddie.
All right, so let's turn to the markets now. How's it looking in Europe?
Well, the Stoxx Europe 600 has edged higher. Now, Europe's main blue chip indexes, that is Germany's DAX and France's CAC 40, have modest gains so far, and that is despite the fact that U.S. President Trump has announced plans to impose 25% tariffs on imported steel and aluminum. And of course, China's tit-for-tat tariffs on U.S. goods also kicked in today, and those, of course, will affect U.S. exports to China worth around $14 billion. But markets appear to be shrugging off concerns about renewed trade tensions between the world's two biggest economies for now, at least here in Europe. And elsewhere in Europe, investors have their eyes on the AI Action Summit in Paris. And on Sunday, French President Emmanuel Macron announced that his country would invest 109 billion euros in AI projects.
All right, guess eyes still on that AI segment, but thank you so much for breaking it down for us, Chip.
Thanks, Laddie.
All right, taking on to North Africa now. Egypt's annual urban consumer price inflation rate, that inched down to 24% year-on-year in January from 24.1% in December. That's data from CapMass right there. That 1 percentage point higher than the median of 23% forecast that was polled by about 17 analysts. So we see food and beverage prices, they were up like 20.2%. Transport, 33.6%. Entertainment in Egypt, that was up by 48% on an annual basis. All right, our next conversation now, we're looking at cyber security in Africa. How's Africa faring, and what new challenges are we expecting in 2025? Well, join us for this conversation. We have Titilayo Dosumu. She's a cyber GRC professional joining me via Zoom. Great to have you on the show.
Hi, Laddie. Good afternoon. It's nice to have you here.
Yeah, it's great to have you. So, I'm talking about cybersecurity now. We all know the importance, at this point, but looking at it from the context of Nigeria's digital transformation, how key is this?
Can you please repeat that question?
Yeah, talking about cybersecurity at this point, we all know the importance, right now, securing our cyberspace. But, talk to me about Nigeria's digital transformation and how we can, leverage, cybersecurity to make this transformation a reality.
All right. Okay. I'll start by saying that cybersecurity is actually one very important part. Is one very important part that is being undermined by not just the government, but by startups, also by multinationals, entrepreneurs, and it is very important part that cannot actually be underestimated. According to NCC, that's the Nigeria Communication Commission, there's a question that says, do you actually know that Nigeria alone loses up to 500 million naira annually to cybercrime, with SMEs and startups being most of the victims? And even though the EFCC chairman also sometime last year actually mentioned that in this part of the country, cyber convictions alone are actually like 3,455. And this actually brings us to the reason why cyber security is actually very important. And if we as a country, we need to go forward, considering the fact that the digital revolutionization that is happening in the country at this very point in time, and the fact that, okay, everything is being digitalized by the government, the recent passports that has been digitalized, even land registrations are being done online. We have to do NIN and every other thing online now. So if we actually want to move forward, we want to be on the likes of countries like Israel, Estonia, and the likes, then we have to take cybersecurity as very important.
Right. And talking about land registration, you don't want any hacker to, switch your land, that you bought with, your hard-earned money. But, with emerging technologies like AI and IoT, how can Nigeria stay ahead, of potential cyber threats, in the next coming years and decades?
Honestly, this innovations like AI and IoT are not something that is actually supposed to be underestimated, because there is a situation whereby there is a situation for a particular fintech whereby they used AI to clone the CFO, and in this situation, they just didn't clone the CFO. They cloned the CFO through video call and through voice by telling the financial secretary to actually send a sum of close to like 240-something million naira. And because this was only made possible because it was AI, and there was no reason for this person to actually, for this financial secretary to actually doubt that wasn't his CFO, but rather it was being cloned. He actually sent this, and this cost them a whole lot of money. So you can imagine if something like this is happening to a multinational firm, a very good startup, a very good fintech, what do you think would happen to the likes of our startups here, the small entrepreneur that is probably in Ikorodu or something? What do you think would happen to them? So this is something we don't have to underestimate. We all have to just like invest, and it's not an individual thing. It is supposed to be done in partnership, both the government, both the corporate bodies, individuals, everybody. Cybersecurity should be a joint responsibility. I understand how people undermine it, but honestly, it's supposed to be a joint responsibility. Even for IoT things, the way things are going, which has to do with Internet of Things, everything now is being put on the web. Even our traffic lights has been connected to the web, medical equipment and all of those things. So you can imagine situations that, okay, maybe there is a cyber threat or there's a cyber attack. It could be actually used to hold the country hostage. And something like that happened in sometimes with National Bureau of Statistics, even though they actually declined it, but a post was made on their X page that says that, okay, there was something like that. After all, they came back to declining. But you can imagine something like that, which means it could actually affect the policy making. It could have an economic impact on the environment, and even sensitive national data could be exposed to these people. And in this kind of case, if we want to have it to get it back without having these cyber attackers to sell it online, then we have to like possibly pay, because we don't want them to sell it to the dark web. So I think cybersecurity is something that shouldn't be undermined, and more so there should be awareness. There should be much more awareness. Governments should try and invest a lot into this aspect of the economy. They should try and train young ones, because I'm surprised at this day and time, so many people still ask what does cybersecurity entails, what is cyber GRC, what is this, what is that? And I'm left to be like, okay, I have to start explaining and all of those things. So I think we need to do a lot of awareness. Cybersecurity shouldn't just be about the professionals alone. Even the mother, even the old woman in the village is supposed to be aware. As long as she has a smartphone with her, as long as she has something that can be connected to the internet, she needs to be aware.
Right. Everyone needs to know about, cybersecurity. But, we've been having outages, recently, network outages. The latest one over the weekend was PlayStation, network. Then we had, a week before that a popular bank, in the UK. So how much of these network outages, have to do with cybersecurity issues?
With that happened over the weekend, you can imagine, PlayStation is one of those multinational firms. And if you can imagine a big company like that having to be, because what was actually being explained, although they actually mentioned that it was just an operational disruption, but as a professional in this field, I wouldn't believe that, to be honest. Somebody else can believe that, but I wouldn't believe that, because I believe there was actually a vulnerability in their system that was exploited by the attackers. Do you understand? I understand why they could probably want to deny that, because for every cybersecurity, for every attack that happens or anything, they are supposed to report it to their customers. And if there's like a data breach or something, they are supposed to pay their customers and all of those things. Although I'm not sure that happens in Nigeria, because I've seen situations whereby there are data breaches and nobody's being paid, nobody's held responsible. Although maybe the company is being responsible, but then in situations whereby the customers, like the bank customers, when it happens to banks, are actually supposed to be paid, compensated for this act. But nobody, as far as I'm concerned, nobody has compensated me since I have been using my bank or something, and I'm aware of so many data breaches that has happened. So that takes us back to the power outage with PlayStation. So it's just something like that happened because there was a vulnerability in their system that was actually exploited. So if something like that can happen to a big firm like that, then it keeps telling us the reason why Nigeria as a country, why we need to invest, if we want to get to the global stage, if we want to maintain our stand as one of the fintech hub in Africa, as the fintech hub, not even one of the fintech hub, because we house fintechs like Paystack, Flutterwaves, OPay, PAMPay are not even to be exempted. So if we want to retain that space, if we want to move forward than where we have been today, then we need to take it as a joint responsibility.
All right, definitely. We'll keep tracking that space. Well, thank you. It was great having your perspective. Titilayo Odosumu, cyber GRC professional. Thank you so much.
Thank you very much for having me.
And talking about cyber, let's see what's playing out with the markets now. We're seeing it's a mixture right there with Bitcoin in the green, $97,804. Some investors expected maybe Bitcoin was going to pull back, but it's not really pulling back at this point. But major markets we track in the crypto space, Ethereum down 0.23%. Let's get a check on the headlines in the market. There we see CZ, that's Xiaopeng Zhao, is calling for automatic token listings on centralized exchanges, just like we have on decentralized exchanges. He's calling for that to reduce some of those roadblocks you have for listing projects on centralized exchanges. Then Ethereum fees, that dipped below $1 million. That was in January for the first time. That's happening. All right, so we're still talking about CNGN right here. That's listing on some exchanges in Nigeria. Let's bring in Chimezie Chuta now. He's the CEO of Blockchain User Group. Hello, Chimezie. Great to have you.
Yeah, Ladi.
Yes.
Day. Always a pleasure to join you.
Yeah, so it's still all about the CNGN, Nigeria's stablecoin pegged to the Naira, 1-for-1. And a lot of talk right now about this latest listing. We're talking about security before now. How secure is the CNGN?
Okay, so CNGN is as secure as blockchain technology is, because it's a solution that has been deployed on the public blockchain infrastructure. So to a very great extent, it's a secure protocol for that kind of asset.
What are you expecting, so far? It's early days in 2025, and now we have the CNGN listing. What are you expecting, for this? And is it a question of will Nigerian investors buy CNGN or hold CNGN? What's the question here?
Okay, so people just have to understand the role that an asset like CNGN has to play in a digital economy. Because for one, we know that the issuance of digital assets directly brings the Naira into international markets and accessible for anyone from anywhere in the world, because it's currently tradable for anyone who is interested on the blockchain. And that's huge, because one of the things that it will help us to do is it's going to reduce our dependence on USD as a secure asset for pulling out our investment in the digital world, which is really a huge thing, because that on its own has a capacity to reduce pressure on the USD as far as Nigerian traders and players in the crypto industry are concerned. Now, the next thing there, you also look at the fact that, as a blockchain-based asset, it has the capacity to bring more people into the financial system. We keep talking about banking the unbanked and bringing in more jurisdictions into the banking system. One of the things that will help us to achieve that more seamlessly is this CNGN project.
All right, we'll definitely keep tracking it. But are you seeing a more adoption, than the e-Naira? That's for CNGN.
I'm not sure I heard you very well on that.
Are you seeing more adoption for CNGN compared to the e-Naira?
Okay, so these are two different kinds of assets, even though two of them are all instances of the Naira. One, the CBDC, is issued by the central bank on a private blockchain and is 100% regulated and controlled by Central Bank of Nigeria. But on the other hand, you have the CNGN, which is a crypto CBDC is not a cryptocurrency, but CNGN is a cryptocurrency because there are key differences. It's accessible. Anyone can go to CNGN Block Explorer and be able to see the transactions that are going on there. And it's accessible. People can integrate them outside of the shores of this country, and they don't require you to do elaborate KYCs that are required for you to use the CBDC that is issued by Central Bank of Nigeria. So there are a couple of significant differences between the two, even though the issuers have the obligation to do KYC for their customers generally, because that's part of their compliance oversight and regulation.
Right.
But for everyone else who wants to use it, you can be rest assured that there's nothing like monitoring as anyone would have expected in the case of CBDCs or the e-Naira.
Right. I got so much to look out for when it comes to the stable coins and central bank digital currencies. Thank you so much. Jim, it's always great having your perspective on the show. Thank you.
All right. Thank you so much, Ladi.
All right, so that's the show today. That's our major markets we track looking. We'll give you an update again tomorrow at the same time. Thank you so much for watching. For me and the team right here at Channels HQ, it's bye for now.